Hello and welcome back to my second ever weekly forecasting video where I look to break down the Forex markets, mainly using the dollar index as my lead indicator of what I want to look at for the upcoming week. So this is where I will look to break down both fundamental and technical analysis in order to give my view on the market. And I think if you stick around, there's some pretty interesting things that have happened over the weekend which you guys might find useful for the week coming. So firstly, leading on from last week, we said that we expected a lower dollar. So if we go on the weekly time frame, we had this order block marked out. We've hit that, and now we are looking to seek sell side liquidity. If I go on the daily chart, we have been chopping around, but we did say that we expected the expansion of the week to happen late in the week from Wednesday onwards, and that's exactly what we got. So we've pretty much nailed the expansion back end of the week if you were positioning for day trades, which I'm currently not. I'm in a swing actually, which I will show in a bit. So before we get into the technicals, because that seems to be the easy part or the less interesting part at the minute, I wanted to just go into some of the fundamentals of why I am currently expecting a lower dollar, as I feel like that will be the most useful information for anyone watching. So last week we spoke about the fact that the labour market had been struggling more and more in the US economy, which is due to, higher interest rates, higher costs for businesses. There's a lot of tariffs that have been put in, which means inflation is going up. And it's a difficult time for people to stimulate growth within business. So with this being said, we know that Powell come out, I think 2 weeks ago, and spoke on this. And he basically said it might be time to actually review the rates and see if there's any possibility to lower the rates, which obviously inherently is a lower dollar, leads to a lower dollar for traders, as if the rates are actually decreased, then investors holding their money in the dollar is less favourable. So people then seek other assets and other things to put their money into, or their capital, in order to get a higher return on investment. So that's why we've seen this sort of lower downtrend in the past few weeks. Now, with this being so focused on the labour market, basically I believe that a big reason this consolidation has come into the market is for one reason. The NFP report is next Friday, and I think traders are looking to this as a final say of what is going to happen. So I expect next Friday to be the big driver on whether this will go higher or lower. But I'm pretty convinced that the US economy is in a state where they sort of need to lower rates now. So I'm definitely comfortable in holding my position in the USDCHF. So I'll just bring that up now just to give a bit of a clear view. So on a weekly time frame, we have this order block marked out from a technical standpoint. We've come up and tagged that area. We swept the previous week's high here. I entered there, stop loss at the 1 as I don't expect this to be taken. And I've given this trade a bit of breathing room as we've been trickling down here because I don't want to get tagged out. I've just given, I believe in my narrative and I'm holding, and the confluences for the trade are right from a technical and a fundamental standpoint. So whenever I feel like I've got a good chance of being on side, I look to ensure that I'm not suffocating the trade. So the most interesting thing to talk about this weekend actually that's come out is the change in the US tariff situation. So obviously, as we know, this year President Trump has put in a lot of tariffs to export countries through trading with the US. So this has been done to incentivize US businesses to start using their own resources. This whole Made in America confluence, he wants to bring that back. And he's done this in a way to sort of promote more jobs in the US economy and production. And this should hopefully give them, even though maybe a bit of inflation in the short term, it should allow them to sort of control to a better degree their own inflation rather than just being left to the prices of export trade. However, he has been putting some hefty tariffs on a lot of countries, and it actually has now been deemed by the US court that they feel like this is illegal and they are looking to remove these tariffs. So the President Trump basically has till the 14th of October, I believe, to fight his case of why they aren't illegal. But this is another confluence for a lower dollar even further. So to break that down a little bit further, the as the US courts have deemed a lot of President Trump's tariffs to be illegal, this does raise a few concerns for traders. So the fact is, inflation has been creeping higher, which is like, keeps the rates high as they want to combat inflation by, sort of softening the spending within the economy. But if the tariffs are taken off, this means that lower costs are now available to US businesses, which would reduce inflation for both consumer and producer levels, which would result in lower inflation, which is good for the consumers. However, for the idea of a rate cut, that just increases this idea more. And then the other issue with this for from a dollar's value perspective would be the fact that it doesn't really incentivize American businesses to hire any more American staff, or at least as much at the rate they were doing. Because if you can now purchase something from, say, Europe at a cheaper cost, then why would you hire someone in America to do the same job if you can actually reduce your costs as a business? So I do believe actually this will have a big effect on Monday's opening price. I do expect us to gap lower, or at least heavily trade out of this consolidation, because this seems to be a big change over the weekend, and it did come after market close. So I think there's going to be a lot of changes in the ordering in the markets, which will be shown on the Monday, in my opinion. So now we've gone through sort of my technical idea of why I want to be in the USDCHF. I did break this down more in the last weekly commentary, if you want to go and watch that, just to get a bit of a better idea of why I'm in this. I want to bring up the Forex factory calendar for the up and coming week. So Monday is a pretty quiet day. Tuesday has manufacturing PMI, and Jolt's job openings is on the Wednesday. So we have on the Friday, I'm just want to skip across to this because I want to get to what's important for you guys. We have NFP. Now this is going to be, I believe, the final piece to the puzzle of these rate cuts, as this will be the final NFP before the September the 17th meeting of what they're going to do with the rates. And as expected, it's 74,000 new jobs is forecast. So if this comes in as expected or lower, I believe we'll see a big reaction lower from the dollar, which should conversely be higher Euro USD and higher GBP USD. So I believe that this is the final piece to the puzzle. If for whatever reason this is a higher number, then we could see more resistance or chop within the market. But for now, the rate cut seems to be set in stone and coming. I wanted to also bring in this. So this is the CME Group's website, which shows the probability of a Federal Reserve rate cut. So we have 13.6% in favour of keeping the rates the same, and we have a pretty convincing now 86.4% in favour of a rate cut. So this is basically a market sentiment chart, which shows the likelihood that traders are banking on and betting on. And it's heavily in favour now of a rate cut coming on the 17th of September. So this is pretty convincing. Now, as you know, the closer and closer we get to this 17th of September, this number will have more meaning. You know, if we're 3 months out and you're looking at this chart, it wouldn't really hold much weight. However, now we are, 2 weeks away. This is starting to really paint a nice picture for a lower dollar, especially with all the fundamental stuff we have been through. So if we want to go back to the calendar, just as I said, I would always cover the day trading aspect. The markets are looking pretty choppy at the minute, so I wouldn't be looking to position myself in any day trades, as the chart isn't showing much from a technical point of view that would lead me to think anything is high probability. I would probably let this week go. If you are a day trader, sometimes letting a week go to help build a better and clearer bias is the best thing you can do, rather than trying to pick trades and losing them in the week. It's actually better to just sit on your hands, wait for the numbers to come out, see where the positioning is, and then see if you can find something that's more high probability the next week. However, if things do become clearer, the Monday, the Tuesday, and the Wednesday would be the only days that I would look to trade, as I believe that Thursday will just be a chop in anticipation of Friday's NFP report. But as I say, if I just go back to the dollar index, there is not much from a technical point of view other than I think this next candle will print lower. There isn't really any PD arrays that I can position in. We do have this volume imbalance, but it's been that choppy. I just think that it would be wrong of me to say I'm seeing stuff in here. I just believe that my overall narrative is lower. I'm positioned in a swing trade, which I believe is a good position to be in. I've got in at a good position. I don't really want to add to anything at the minute, as sometimes the best thing you can do once you're in a trade is just focus on it and hold it, rather than getting into more positions, over leveraging yourself and losing more. So if we just go over the Euro USD, it's pretty much the exact same thing. On the weekly chart, just to have a quick look, we swept the previous week's low, we've closed much higher, and we've now got this fair value gap and a rejection block from this, sweeping this liquidity, and a close higher. If I'm lower on the dollar, I'm definitely just only favouring longs on the Euro USD, and the same with GBPUSD. Now, the thing with GBPUSD is it does seem to actually show a bit of weakness compared to the Euro, which is showing more strength. So if I was looking to position myself in either of the two, I would definitely be looking at the Euro at the minute. For all the other major currency pairs, I'm not really too interested. If we look at the bonds for a minute, we have we traded up a little bit, and now the bonds are starting to sink a little bit. So I would definitely, it's just an extra confluence for a lower dollar. And there isn't too much changing from last week's weekly commentary in terms of narrative or sentiment. We just now have the added confluence of the fact that the US courts have now deemed the tariffs illegal, and we have to see what comes of that. So there's been a lot of information in this video, and it's maybe something that you might have to watch a few times just to go over what I've gone through and what I've said. However, I'm probably going to leave it there, as I've shared everything that I think will play a factor in next week. And, short dollar, long Euro USD, long GBP USD, and a short USDCHF is my main viewing point at the minute. So if you guys have enjoyed this video and you want to tune in next week, I will be breaking down the NFP numbers that get released and where we stand with that. And I, hope you have a good time trading, stay safe, and see you in the next video.